What I want to talk about today is something that we at Circle are talking a lot about these days, which is this idea of the tokenization of everything. So what do we really mean by that? First, just sort of stepping back, there's this sort of high-level idea of this crypto revolution. What is this? Few different things. First, it's basically a fundamental new layer of infrastructure for the internet. It is a new, open, global, immutable, and incorruptible infrastructure that allows for record keeping, that allows one to perform transactions, and allows one to run code. The concept that a lot of people talk about is sort of Web 1.0, Web 2.0. It's about information, media, communications as the kind of core horizontal use cases. Kind of crypto and what people call Web 3 is about value exchange, governance, and trust, and all of the myriad ways that those intersect with the world. So this crypto revolution is driven by what we think of as a new kind of technological economic synthesis, where economic incentives meet protocols and network schemes, and this allows us to build applications, networks, business models, et cetera, that run without a centralized corporation or a government, and that's pretty powerful. So this is kind of new global public utilities that everyone can build on and rely on for various tasks. But it also, in our minds, kind of creates the foundation for reinventing microeconomic units, what we think of as firms and the economy itself and the nature of how that all functions. In terms of what impact this has, we think in particular this is very, very impactful to what I call the kind of fiduciary and record-keeping industries, although the impacts go way, way beyond that. I think very, very specifically, the fiduciary and record-keeping industries have the most maybe to lose, but also to gain. So finance, accounting, insurance, corporate commercial law, kind of any system of voting or governance that exists in the world today, and even fundamentally how civic services are rendered, which are largely record-keeping oriented kind of public civic services. All these can be kind of reconceptualized, reinvented, and built upon using this technology. Now, Circle in particular is focused just on finance and what the impact of this is within finance. There's a lot of talk. When we talk about tokenization, it can mean a lot of different things to a lot of different people. People think about cryptocurrencies. They think about security tokens. I want to kind of break down for you guys how we look at the kind of topology of all this stuff. And so we think about this in sort of three big categories of crypto assets. And in particular, crypto assets we think of as things that are purely digital assets. They're issued and mediated on what we think of as public blockchains, on this public infrastructure, so it's not kind of private infrastructure. And these almost all have kind of free-floating market price value and are liquid in some way, or ultimately aim to be liquid on new forms of capital markets, which are these digital asset exchanges. Three buckets: cryptocurrencies, crypto commodities, and crypto securities. So cryptocurrencies, you can include things like Bitcoin, as well as many spin-off currencies from Bitcoin. And there's different types of these. There's sort of privacy-focused cryptocurrencies. I put Bitcoin in that, which is really trying to create a highly private, non-sovereign payment currency of some sort. There are tokens that are designed to kind of be intermediate tokens for payments. So they're not quite currencies, but they play a currency mediation role, like Ripple and Stellar. And then this sort of new bucket of stablecoins, or what I prefer to call fiat tokens, but stablecoins is a broader category, which includes things like US dollar coin, Tether, and Maker, Basis, a bunch of others, and there's a longer discussion on that. Crypto commodities are really different than things that are designed to be currencies. They're things that are designed for payments and a medium exchange. Crypto commodities are really designed as a token that has some utility value. It's used for consuming a resource of some sort. If Bitcoin is gold, these commodities like Ether might be better thought of as oil. It's a commodity that's used, it has utility to power different things. Now, there are a lot of different infrastructure projects that are built on these kinds of crypto commodities. The big names are things like Ethereum, Neo, EOS. There's next-gen projects like Algorand and Definity. And then there's a huge range of utility tokens that businesses are issuing they're issuing these as a way to incentivize market participation, customer behavior, other things like that. At one end, you have things that you'd think of as like a loyalty token. And at another end, you have things like Ethereum, which are really a commodity that's used to consume a computing resource, basically, and to be used to consume that computing resource. So that's another really, really big category that's out there. And then the last piece is what we call crypto securities. And when we talk about tokenization of everything, this is actually the one that we think is really quite important, and it's one of the most nascent ones. So crypto securities, what a lot of people like to call security tokens, are new forms of tokenized securities, i.e. these are rules-based financial contracts. So it's a financial contract that has a bunch of rules that's written in code. These have incredible and fascinating new capabilities that go far, far beyond what we think of as today's English language paper-based law firm mediated securities. And these crypto securities ultimately have the power to merge both utility value and kind of financial contract value. So that's sort of the third big bucket. Why do we think this is so important? It's, and ultimately, what is it we think this leads to? We think it leads to this tokenization of everything. So we think we're at the start of this era where more and more assets will have a cryptographic token representing them. So every form of asset, every form of value storage, every form of important record can become a crypto token. You have things like financial tokens. So these could be financial tokens representing something like a fiat currency, like US dollar coin. These could be financial tokens that represent literal equities, but in a crypto form, or new forms of equities that are written entirely in code and issued on blockchains. Debt and loans can be represented in this way as financial tokens, even insurance contracts. So there's a big category that I'd sort of say are these financial tokens. Property tokens is another big category. So property tokens would be, land, houses, cars, art, personal property. You could argue even one's own labor could be tokenized in interesting ways, and so your labor output as a token is an interesting idea. So these property tokens ultimately are very important because if you think about all the value that exists in the world, so much of the value in the world actually is property. And that is sort of in the tower structure of finance, property is actually kind of pretty foundational. And so if you can create radically more efficient, open, interoperable global ways to allow that value that is stored in property to be traded and exchanged, invested in, utilized, et cetera, that's also pretty powerful. Or if you can combine utility value, like if you have a token that represents value in an apartment complex, then maybe you could use it once a month or something like that. You can merge utility and security value as well. And then this last kind of decision tokens, sort of votes, are a fundamental form of token, and tokenized voting and using blockchain technology to mediate votes, to record keep votes, to provide assurance around votes surely sounds important today. So what's needed to realize all this? There's a bunch of things. So we need more mature and scalable public blockchains. I think there's a lot of good work happening there, and we're going to see that over the next 12, 24, 36 months. So we can actually build apps and infrastructure that supports billions of users. A big piece of what's needed for this is what we think of as fiat-backed tokens, so things like US dollar coin, which is something we're working on. There's others too. But basically, these contracts all need to be denominated, and they need to be collateralized, and they need to have fiat value at their core, and so you need fiat tokens to actually do that. You're not going to denominate a contract in a volatile commodity asset. You need mature token marketplaces. So you need markets where people can issue these, where people can trade these and exchange these, and those should be open and global. And then lastly, we need regulatory clarity. That's sort of obvious, but there's a lot of good work happening there. Fiat tokens we've touched on. I think this is really critical, but basically to be adopted by mass society, tokenized assets need to be denominated in fiat money, at least until we have globally accepted price-stable non-sovereign cryptocurrencies, which I don't think we're right on the horizon of. But ultimately, why tokenize everything? Like, what's the punchline here? Our belief is that society deserves secure, incorruptible data and record keeping, that human error is a huge issue, and that automation within civil and economic activity that are prone to error, but in particular that are prone to corruption, can be better addressed with this kind of technology. We want to open up value sharing so that there's new avenues for value sharing globally between people, between businesses, and for society as a whole. This also leads ultimately to greater levels of transparency and accountability in all social, economic, and civic activity. And ultimately, this is about how do we drive a sort of more globally integrated world and reduce poverty and the risks of war. So tokenize everything, save the planet. Thank you.